So the topic is purchases returns book. Okay, purchases returns book. When you are doing business, you can do two types of business. One is to buy goods from X and sell the same goods to A, B, C, D, E, F, or and so forth. Okay, or 1, 2, 3, 4, 5 kind of customers to your customers. You buy cloth in tons from Gujarat and bring that cloth to Hyderabad or Secunderabad and sell it in meters. What are you doing? Are you doing any changes to the cloth? You're not doing any changes to the cloth. Okay, you're buying from a factory in Gujarat and selling it in the retail market in Secunderabad and Hyderabad. What is this? It is trading activity. It is trading activity. Means you buy from somebody and sell to others, somebody. It is trading. You buy at low price and sell at high price. The price differential is your profit. This is trading. Excuse me. And the other category is manufacturing. You buy the raw material, you buy cloth from Gujarat, and you have a factory at Maychel or Patancheru. What is that? Garments factory. Chermas is a very good example. They take the cloth from different suppliers of the material, varieties of clothes they purchase, and they start manufacturing the garments. These garments, men wear, women's wear, kids wear, it is like that, various types. What do? They buy the cloth and process it to another type of, another form of the same cloth. It was a raw cloth converted into shape, into trousers, into shirts and frocks. It is sold into the market. It is processed. The material is processed. And it's a manufacturing entity. So generally in a business, we have broadly two types if it is based on goods. There is a third type, service provider. Okay, what we are doing as a college, we are providing services. We are also a company, but we are providing services. There's nothing tangible that you can see. Okay, there's nothing tangible, but our services do carry some weightage for which you are paying the fee or the price. Whatever fee you're paying is the price. Okay, so these are three types of organizations: trading organizations, manufacturing organizations, and service organizations. Fine. Now we're talking about the purchases, purchases of goods and goods only. Goods meant for resale, goods meant for process and resale. Okay, we are not talking at the moment about the services because there are no tangible goods to be purchased. So therefore, we'll set aside the service part, okay, for few semesters. Okay, right, goods. Now, when we purchase the goods, some of the goods may not be as per our description. Some of the goods may be defective, damaged in the transit. Some of the goods may not be as per the configuration that we have specified in the purchase order with the supplier of the material. Okay, so reason could be anything, but we don't want to accept those goods. We want to return those goods back. Okay, when you're returning what you have purchased, that's a purchase returns. And to maintain the record of these purchase returns, we are picking up a book called Purchases Returns Book. What is this? This is one of the subdivided journal. One of the subdivided, one part, one segment, one component of subdivided journals. Okay, subdivided journals. Right. Now, once again, I'll come back. This book is used to record all returns of goods by the business to the suppliers. The entries in the purchases returns book are usually made on the basis of debit note issued to the suppliers or credit note received from the suppliers. There's a debit note, there's a credit note. When we buy goods, what's the entry, journal entry we write? When we buy goods, we have purchased goods. Yes, ma'am. Go ahead.
Cash account debit to goods account.
Cash to goods. Okay, cash to goods. Yeah, if you feel that there's a noise around you, okay, better not to respond because that noise also is being recorded. Okay, ma? So try not to unmute yourself. Okay. So, right, cash account debit to goods account, somebody said. That's wrong, right? That's wrong. Now we can no longer continue to commit mistakes or errors. Okay. Now, by now, we should get used to this journalizing. Cash is going out when we buy. Okay. So, therefore, cash has to be credited. And what is to be debited? Goods have to be debited. Purchases to be debited. Okay. Purchases to be debited. Now, purchases or purchase returns book records only the credit transactions. So, therefore, there's no question of cash. So what else? It is the goods account debit or purchases account debit to the person who is supplying those goods. Okay, X account or let's say Brahmeshwar's account, or let's say Damini's account. The one who is supplying goods, we write the name of, we credit the one who is giving us those goods. Credit the giver is the rule to be applied, right? So therefore, we are crediting his account. When he sells the goods to us, we purchase. When we purchase, our account is to be debited. How our account is debited? Our account is debited in the form of purchases. Purchase account debit means it is our purchases. It is the company's purchases. Okay. So purchase account debit because goods are coming in to whoever is supplying, whoever is giving those goods. Okay. That's what it is said. The entries in the purchase returns book are usually made on the basis of debit note issued to the suppliers or credit note received from the suppliers. Now look at this. Whenever we are purchasing, we are debiting ourselves and crediting them. When we are returning, now look at the sentence. When we are returning, we give opposite entry. Okay, let's say Damini is our supplier. We are sending them back to Damini, and now the entry will be Damini's account debit to purchase returns account. Okay, so the same account will be debited, reversed when we are sending those goods back. Okay, and with a note why we are sending them back, we have to give the reason for that. Okay, and we put a note, we write a note. Okay, that's called debit note when we are sending. Okay, now the seller, okay, the seller or the supplier, he gives a credit note. For him, it is a credit note. For us, it's a debit note. Okay, the same note is termed as credit note from the receiving party's point of view because he will credit the account of the party from whom he has received the note together with the goods. You know, he also, Damini also maintains our account. Okay, in her viewpoint, she is receiving. From whom she is receiving? From us, she is receiving. So our account is credited because we are the giver to Damini. Okay, so look at this. If I am giving, you're the receiver. If you're giving, I'm the receiver. If there's a giver, there's a receiver. The one who is receiving to be debited, the one who is giving to be credited. And this rule should never be forgotten. Okay. Okay. Now, when you are posting or balancing this particular transaction or these transactions, you have to bear in mind two important steps. Number one is individual amounts are daily posted to the debit side of the supplier's account. There you write two purchases returns. Okay, two purchases returns in the particular column. Date you'll write in the date column, amount you'll write in the amount column, but what is to be returned? Okay, what is to be returned or where it is to be returned? It is to be returned on the debit side. And what is to be returned? You have to write as purchases returns account. Purchases returns account. Okay, purchase returns account. And step two is periodic total is posted to the credit of purchases returns by writing by sundries as per purchases returns book. Or now let's keep aside as per purchase returns book. Just as of now, remember by sundries. What do these two steps mean? You will understand only when you look at a problem along with its solution. Okay, right. Yeah, this is a problem. There's a small problem. Okay, there's a small problem. Enter the following transactions in the purchases returns book of Hari and post them into ledger. Post them into ledger means what we are going to do is a journal, and this journal is part of one of the categories of the journal, the one of the subdivided journals. All the repetitive items are categorized, and all those things are dumped there. All purchases in one book, all sales in one book, all purchase returns in one book, all sales returns in another book. Okay, so you classify them and dump the repetitive transactions there. Therefore, it's a journal. It's a journal, subdivided journal. Now, so Hari is the proprietor or the owner or business owner, and in his accounts or in the books of Mr. Hari, okay, that should be the main heading. Under that, you will open the account. What account? Purchases returns account. Okay, I'm sorry, purchases returns book. I'm sorry, it is not an account, it is still a journal. It's a book, subdivided journal. Okay, it's purchases returns book. It's not account. Okay, please excuse me. Next, yeah, in the books of Hari, purchases returns book. Account will go to the next step. Okay, as a next step. On January 5th, 2020. Return goods to Anand. 5 chairs at 200 each. 5 chairs at 200 each. Okay. Why are they returned? They are not in accordance with the order. They are returned because they are not in accordance. You have placed the purchase order. They are not as per your request. So therefore, you're sending them back. 5 chairs each at 200. Now, look at this. What you'll do is Anand is a person. Write that heading. If possible, underline that. Okay. Now, this is the person dealing with, right? Now, there are 5 chairs at the rate 200 under that. Okay. What happened to these things? They are returned to Anand. Okay. They are returned to Anand. When? On January 5th. On January 5th, date in the date column. Okay. Anand is a person in the particular column. To Anand, you're sending. What are you sending to Anand? You're sending 5 chairs, each costing 200 to Anand. That's what written in the particular column. And there's a debit note. Okay. There's a debit note, and that debit note carries some number. If that number is given in the problem, you drop here. Otherwise, it's irrelevant. Okay, you just draw the column, just leave it like that. Then you have ledger folio. I told you already what's ledger folio. It's a page number, okay, of the same transaction in the ledger accounts. Then amount column. The amount column is divided into 2 columns again. One inner column for calculations, okay, simple calculations, and one outer column. The amount column is divided into inner column and outer column, or inner column is called a detailed column or details, and the outer column total. Okay, and lastly remarks. Now look at the columns. The problem is simple. Only thing is guys can't work out the problem, this simple problem, because they don't remember the column headings or the names. If they know the column headings, and the rest is easy. Date, particulars, debit note, ledger folio column, amount column, remarks column. Date, particulars, debit note, ledger folio, amount, remarks. These are the columns to be remembered. Amount column is subdivided into two, details and total. Right. So on 5th January, okay, 5 chairs at 200 each return to Anand. Okay, return to Anand. 5 into 200 is 1000. 1000. And what's the reason for sending them back? They are not as per your order, not in accordance with order. That's the reason they have written. Okay, not in accordance with the order. That's the reason. You have to write that reason. That's what remark. Okay, that is number January 5th. On January 14th, return goods to Chandran, 4 chairs at 200 each and 10 tables at 350 each due to inferior quality. Okay, the quality mentioned is different and the quality received is different. Quality received is different. Okay, so you want to send them back. Which date? 14th. 14th. To whom? Chandran. Write down Chandran here in the particulars column. If possible, underline with pencil. If possible, underline with pencil. Yeah, underline with pencil. And 4 chairs at 200. 4 into 200, 800. Okay, 4 into 200, 800. 4 into 2, 800. And 10 tables at 350. Okay, 10 tables at 350. Okay, 3,500. The total is 4,300 to be taken to the outer column of the amount. Okay, now the total of the book is 5,300. And you're writing why you are returning the second lot also. And the reason is due to inferior quality. Due to inferior quality. Okay, you're returning them back. And what's the total? 5,300. 5,300. Okay, 5,300. Let's come to the ledger accounts. Ledger accounts. In the purchases returns account, you're writing by sundries, by various. You know, actually, in the beginning of journalizing, we were doing all these things in detail, one by one. We are doing. Okay, so now all those repetitive things are written in this book. All the purchase returns are written in this one book, and the total only is brought to the account, ledger accounts, purchase returns account. The total is written, okay, on the credit side by writing by sundries. Sundries means various, okay, various types of accounts or various types of orders or returns. Together it is forming 5,300. Actually there are 3. Instead of writing individually 3 accounts here, okay, look at this. Anand and Chandran. Anand has 1 transaction, Chandran has 2 transactions. Instead of writing by Anand, by Chandran, you're writing simply by sundries, means various. You're writing 5,300. Okay. Next, let's come to Anand. Anand's account also you have to open. Now, if it is credited in purchase returns account, in Anand's account, okay, in Anand's account, what you have to do is you have to debit the purchase returns. The same amount you will write. Okay, look at this. Same amount you will write, but you will be debiting to Anand's account by writing purchases returns account. Now look at this one. When you have let's say when you have, yeah, when you have purchase date, you have written like this now. Okay, okay, when you have purchased this, you have written like this now. Yeah, to Anand. This is what you have written. When you purchased it, purchases account. You know, purchases means it's credit purchase only. I'm not talking about cash purchases. Cash purchases will go to cash account. Now, two purchases, sorry. Yeah, purchases account debit. Okay, to Anand account. That's what you are written when you have purchased it. Okay, when you have purchased it, this is the entry or this is the account. But now the account is reversed. The account is reversed. Okay, the account is like this. Anand's account debit to purchase returns. The amount is same. Okay, the amount is same. And the columns are same. Date, particulars, JF amount, date, particulars, JF amount. Similarly, you do for another supplier, that is Chandran. Okay, to Chandran account debit to purchase returns account. Look at this. Where did you get it? This is the journal from journal. This is subdivided journal. Okay, Anand, you have written already 1000 and 4000 to 300 belong to Chandran. So when you're opening Chandran's account, Chandran account debit to purchase returns 4,300. Okay, that's the end of the solution. Now, please ask me the questions. Please ask me the questions. Any doubts, please?